On today's Hot Sheet, I'm discussing the Freddie Mac spotlight on first-time homebuyers, the job openings and labor turnover reports, the ADP employment report, and mortgage applications for the week. Today is Wednesday, October 30th, 2024. I am Byron Lazine, and the Hot Sheet starts now. Welcome into the Hot Sheet. Let me know in the live chat which market you are tuning in from. If you're getting value from the show, please remember to hit the thumbs up here on the live YouTube or share this video with somebody who can benefit. The replay of the Hot Sheet is available every day on Apple and on Spotify. You can always subscribe and leave a review there if you enjoy the Hot Sheet. To get the most out of the Hot Sheet, of course, join BAMX. It's where we release our Hot Sheet show notes and our charts so that you can use this data in your business. Get the fastest access to tools, data, and content inside of your platform in BAMX today. Use code ZOO to get 25% off of BAMX. That's thanks to our partnership with Zoodealio, where you now get a free Zoodealio dashboard branded to you to help you get more listings. So much going on in BAMX and so much going on in our housing and real estate world. So let's get into it. There's a Freddie Mac spotlight on first-time home buyers. We have an article up on nowbam.com, of course, in BAM fashion, memeified with the thumbnail there. But the punchline here is 30 renters are out there for every home for sale. Okay. There's a huge supply crunch happening for first-time buyers. This is, not different in anybody's community. Even if you're in one of the communities that is experiencing an increase in inventory, then you know that right now in those median or first-time home buyer prices, it's still very competitive. Okay, this is up from 10 renters per home for sale in 2006. Okay, 30 renters today per home for sale. So maybe the government's wishes are coming true, this renter nation, where everybody has to rent everything and rely more on the services of DC. Okay, it might be a dark message, but there are many who believe that to be true with some of the policies that have been in place over years, over multitude of administrations. Okay. It's not one administration or one side or the other that has put us where we are today. It's why yesterday on the Real Word, and I think I see a comment about Jason talking about yesterday's Real Word. It's why when we were breaking down the opportunity report, the biggest opportunity of all is to make housing affordable again. Yeah, that might sound like a political slogan. I tweeted it out on X last night, but it just happens to be the truth. If we make housing affordable again, it can open up opportunities, not just for the real estate industry, not just for the stakeholders, as T360 calls it. And I covered yesterday on the Real Word Pod here on the YouTube channel, but for everybody who wants part of the American or housing dream of home ownership. That should be the agenda on the other side of all of the real estate regulations and lawsuits, and on the other side of this heated election cycle that we're going through. I fear that we can't rely on the federal government, no matter who wins, to solve this problem. It's going to be about getting involved locally to really try to solve the problem. And I encourage all of you to do that, because this number going from 10 renters per home from sale in 2006 to 30 to 1 today is going nowhere but the wrong direction. If we don't do anything about it, it'll be 40 to 1 before you know it. Okay. So this Freddie Mac's October spotlight focused on 3 first-time home buyer trends. Again, this is all available if you want to use it on nowbam.com. And then we'll have further data from the report inside of BAMX and your Hot Sheet show notes to use with your database. Okay. But the 3 first-time home buyer trends is they have an increasing role in overall housing demand. So more First-time home buyers are in the market, making up a bigger category, geographic preferences of first-time home buyers, and then potential headwinds that could hinder first-time home buyer activity in the future. So according to Lending Tree, 62% of renters are afraid they'll never own a home. We've heard this, we've covered this. Okay, there's a fear out there of never owning a home. In fact, when I was at the realtor.com meeting last week, Danielle Hale, by the way, who will be joining us on Knowledge Brokers podcast in a couple of weeks. This Friday over on Knowledge Brokers podcast, we have Jack Miller, CEO of T360, to review that opportunity report that we touched on the Real World yesterday and that I just mentioned. But Danielle Hale said, because of this number, okay, this 62% of renters are afraid they'll never own a home. There is actually a something that economists have been able to track, that there's this I don't know if I want to call it a condition, but there's this thing that's taking over a little bit on some of these people who believe that home ownership is so far out of reach, and it's called doom spending, meaning that if you believe you're never going to be able to own a home, you're more likely to just waste that excess money as opposed to saving it. It sounds crazy, but it's more of a mental place to try to be happy in the moment, where it's like, I'll never be able to own a home. The prices keep going up. It's unaffordable. The interest rate's unaffordable. The insurance is unaffordable. It's going to be so far out of reach for me. My income's not going to keep up with it, that I'm just going to go ahead and kind of spend on things today that are going to make me happy in the moment. Doom spending. And then you get into this, Laura says financial YOLO, right? You get into this doom loop of just every week spending to get that dopamine hit to distract you from maybe the anxiety or the, maybe even at the depressive state of not being able to realize the dream that you want, which is home ownership. This is, when you're helping people in housing and you're helping the community kind of close that knowledge gap. That's right, why the show exists, right? When you're helping people close the knowledge gap around housing and how important it is and what are the right things to do and the right steps to take and how to protect yourself and how to take less risk and when's there time to maybe take a little bit more risk in a negotiation or whatever the case may be, you're really impacting a significant amount of emotions. It's the top 3 most stressful time is moving. And so when you really take that into account as a real estate professional, somebody who works in the housing industry, realize the impact that you're making. It's far greater than one that the federal government has or could make in this sector. It's why you are so important with what you're doing in your community right now. 52% of these renters say home prices are too high in their areas. 69% struggle with their credit score, or 39% struggle with credit scores. More than 8 in 10 indicated a preference for home ownership over renting, including 76% of those earning less than $30,000 a year and 79% of Gen Z. As far as moving factors, 62% prioritize the flexibility of owning a home. 61% value stability, and 44% see home value appreciation. Listen, home renters are just like homeowners. Okay. The difference is that big difference is that flexibility. Hey, I want to get a dog, but I can't, or I got to get it approved. I want to get a cat. I want to get 5 cats. I want to get, some farm animals. All those things are like no-go zones for a lot of tenants. I get it. There are some single families where you could do whatever the heck you want, but that's not the majority. Remember, there's 30 renters to 1 home for sale. There's a lot of those tenants, a lot of those renters who don't have flexibility that they would have if they could own a home, their own decisions, making something theirs, having that feeling that they're making the decisions in their life when they're at home. Renter households between 25 and 44 years of age earning at least $75,000. This number's up. I know it's down here in the last couple of months from the peak, but this is a big number. Okay, 75,000. 3.3 million. Okay. If you go back to, 2012, we're only talking about 1.5 million. The difference between 2012 and today is we had a whole heck of a lot more inventory. So there was a lot more options. Okay. And those options were priced at a discount because of the mortgage crisis. So, you're seeing more renters kind of stack up even in those higher earning categories, certainly in comparison to 2012. Freddie Mac share of first time home buyers, quarter two of 24. Freddie Mac has their share. Freddie Mac obviously doesn't do every loan, but they do a lot of them. 53%. That number has been on the rise consistently since the early 2000s. It almost looks like home prices just going basically up and to the right here over time. Okay. Here's where the share of first-time home buyers, or the change of first-time home buyers from 2019 to the 4 quarters ending in quarter two of 24. Okay. So the darker blue would be greater than 10%. And then it moves down from there to the lighter blue. So Florida and Texas and Louisiana, kind of those Gulf Coast states, are seeing a smaller share of first-time home buyers, attracting certainly more of a retiree demographic there, or people that are relocating. From we talked about some of the migration patterns yesterday, migrating from out of state that have are selling a house and moving into those states. Okay. Minnesota and Wisconsin are among the states, along with Vermont and Rhode Island and Connecticut, that have a higher share of first-time home buyers. Okay. So those areas there in the Midwest and then the Northeast, those are also areas where we've seen very low inventory levels, right? And then where we see higher inventory levels, Florida, Texas, they have less of the first-time home buyers, even though you could argue places in Texas might be more affordable than places like Connecticut or Rhode Island or Vermont or, Minnesota. Perhaps, it's going to find more affordability in Texas, but you're not seeing the first-time home buyers in as much of a share that you see in those other areas. Arizona, Utah, also lower, Virginia and South Carolina on that change in share. And that's just a change, okay, from 2019 to 24. So just predominantly what's happened in the last 5 years, okay? If you're in one of those states where you're seeing an increase in first-time home buyers, you're probably also seeing prices move up. Unemployment rate by tenure, owners versus renters. Renters are in at 6.1%. So that's well above the national average there at 4.1. Owners are well below at 3%. Okay. If you need any reason to help a renter, if you need any other reason besides the obvious ones on, wealth and all of that, this would be another one, right? Like homeowners in this country have a much more stable bank account, savings, wealth over time, job stability, and the numbers in every category really show that to be true. Freddie Mac, again, in our hot sheet show notes, we break down all the highlights and link to all the sources as we do every time. We also have the 6 charts all downloadable for you in BAMX. Use code ZOO to get into BAMX today so you can use this data and put it right into your conversations that you're having in your database. So many of you, thank you for sending me. I'm seeing audio, but I guess it's fine for everybody else. Okay. So thank you for so many of you that are sending to me some of the notes where, hey, I had this conversation today, used it right out of the hot sheet show notes, and was able to get the deal or help the client be more educated. So use code ZOO to get into BAMX today so you have access to all that. The fastest data source in housing is the BAMX platform. Okay, we have to watch jobs And we have some job opening and labor turnover reports that were just released. The U.S. Labor of Statistics reports that job openings held steady at 7.4 million in September. It's way down from where we were peaking at 11 plus million. Okay, hires remained at 5.6 million and total separations at 5.2 million. The report also highlights a 238,000 year-over-year increase in layoffs and discharges alongside a 525,000 decrease in quits. Why are jobs so important? Well, every time we get a jobs report, the 10-year reacts one direction or another much more significantly than anything that the Fed does. Remember, the Fed cut a half a point for the first time in years. And what happened to the 10-year and the 30-year after that? They went up because stronger job reports came out afterwards. And so the stronger the job reports, which sounds great for economy and for people in the community, having a strong job economy, it's all great, but it will mean higher rates. It'll mean higher rates for longer. The 30-year fix doesn't move down unless jobs weaken. And the points along the chart over the last couple of years where the 10-year and the 30-year have moved down have been solely the points where jobs have weakened. So job openings, not, if we saw job openings going up, okay, so holding steady at 7.4 million, and is a good thing. If it went up, we'd be saying, wow, there's a lot of companies that are ready to hire and, add people to the workforce. The more companies that are fighting over, a limited supply of workers creates potential wage inflation, which could also, create higher inflation down the road. And that's where the Fed would look at that and say, hey, we got to keep these rates higher for longer. Okay. The job opening rate, 4.5%, steady month over month. The decreases, industry changes on decreases would be on, and this is job openings. Okay. So these are postings. These are not hires. Okay. Healthcare and social assistance down 178,000, state and local government, and that excludes education, down 79,000, federal government down 28,000. And so there's been an increase in finance and insurance up 85,000. Those are just openings. We know that when we look at state and local government, federal government, they're amongst the largest high of actual, jobs being created. Every time we look at new job creation, government's at either 1 or 2 in the list. It's been every month for the entirety of this year, really inflating what we call a strong economy by continuing to widen the deficit. 5.6 million total hires in September is largely unchanged over the month. That came in September. Hire rate 3.5% steady over the month. So job openings and turnover really unchanged. Those are good numbers, solid numbers for the economy. It's all good there. Now we have our ADP employment report. Okay, this is kind of a preview before the big. I think there's a bigger one on Friday that we're going to pay a little bit more attention to. But this is for October. U.S. private sector employment ADP employment report says that the employment grew by 233,000 jobs. While annual pay for job stayers rose 4.6% year over year. That 233,000 is the highest since July of 2023. This was boosted by 2 hurricanes and the recovery for those hurricanes. Okay, here's the sector breakdown. Okay, you've got goods producing 22,000 jobs, and then you've got service providing 211,000 jobs. Education, health services coming in at 53,000. Trade, transportation, utilities coming in at 51,000. Financial activities coming in at 11,000. Professional businesses, etc. Okay, so again, this is not all the jobs because this is private sector employment. I just mentioned government's one of the biggest hires. When you see the government numbers I think it'll be Friday when we see all jobs, it'll trump some of these numbers. Okay. It'll blow some of these numbers out of the park. which is unfortunate because that's us borrowing money that we don't have to create jobs that might not even be necessary, depending on how you feel about more expansion of government and more government hiring. Every month we've expanded government hiring when we go deeper into a deficit. Yesterday on the Hot Show, we talked about how the deficit is impacting 10-year. Who the hell wants to hold on to U.S. bonds? If you think the 30-year fixed is going to go down when we keep increasing debt, you're kidding yourself. Okay, so if you're passionate about the 30-year fixed moving down, got to get passionate about us starting to at least work on or acknowledge the deficit. Would you hold U.S. debt knowing that the deficit continues to go up? That's essentially what people are doing with the bonds. They're holding that U.S. debt. There's more risk involved. The more money we keep borrowing, we're borrowing money just to make interest payments at this point. And so that's going to keep rates higher for longer. When we talk about housing affordability for people in your community and people across your state and in the country, then we're not going to get there with high sustained interest rates. We're not going to get there with high regulations on these builders. It's going to be a continuous uphill battle. So the jobs numbers, again, they will impact what happens with the 10-year. We did see, some movement down here in the 10-year off of yesterday. We're at 4.2, but really kind of unchanged from where we've been at as of late. We've been in that 4.2 range. Yesterday and the day before, the first couple of days, we hit 7% on 30-year fixed. We hit 7% day before yesterday and 7.03 yesterday. So we're back up over 7% on the 30-year fixed. Just at 6%, it seems like. Yesterday, that was on the second week of September. We're in that 6% range. So unfortunate now that we've climbed all the way back up over 7%. Mortgage applications came out this week, and I've got the data here for you on mortgage applications. What does demand look like? We've seen 4 or 5 weeks now where for the first time in a couple of years, we've seen year over year growth on mortgage applications, which has been a good sign, especially when you consider what season we're in, not just the winter season, but in an election season when people are supposed to be pausing. A lot of that was driven off of that mid-September low 6%. Now we're pretty much well off of that. Where are we at on this past week? The seasonally adjusted purchase index increased once again. This is great news for the pent-up demand finally coming out of the woodwork. Increased 5% from 1 week earlier. Okay. The big headline number year over year is 10% higher than the same week 1 year ago. This is great news coming in on a week when we saw high sixes on mortgage applications. The overall, when you include refinances, mortgage applications decreased 0.1% from a week earlier. And that's just, that is just those refinances really cooling off as we've now breached 7% on the 30-year fix. But I take this report as great news for what could be to come in the spring 2025 market. If you're seeing increased activity now year over year, that to me is gearing up for an early and more fluid spring than what we've seen here in 2024 once we get on the other side of next week and certainly the winter. We're 8 days away from the next Fed meeting, or 8 days away from the next Fed meeting, obviously 7 days or 6 days away from the election. The Fed meeting is at a 94% certainty that there will be a quarter point cut, 5% certainty that there will be no cut. I think the election looks more like 50-50 depending on what polls you're looking at. So at least we have some certainty there on what the Fed will do after the election next week. Huge week next week, but we've got one more show before then. That'll be tomorrow here on the Hot Sheet. If you want to get the fastest access to data and information and content and done for you content, join BAMX today. Use code ZOO to get in there. Every BAMX member also gets a free membership dashboard into Zoodelio, which is actually a higher cost than even BAMX. So you're not only getting a you're getting a massive savings by being part of the BAMX family. Zoodelia helps you get more listings today, as well as bring instant offers to your sellers. So you can be in a multiple offer situation right off the bat, help you compete with an iBuyer in your market, but also just help you get the data that you need to get more listings. Zoodelio's been a great tool for so many BAMX members. BAMX in a Box, which is the done for you content we release every single Friday. Even a caveman like Jeff can utilize the BAMX in a Box done for you content. Join BAMX. It'll be the best deal you've ever done, which supplies you with the fastest access to data news in a 24-hour cycle in the platform that you can use on your conversations and in your marketing today. All right, there you go. That's your hot sheet. I'll be back here tomorrow live, 9:30 on the East, 6:30 on the West. Until then, of course, toodaloo.